Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Yesterday, the Australian dollar sailed slowly into the Reserve Bank of Australia's rate decision at 2:30, and as widely expected, the RBA cut its interest rates to a new all-time low of 0.75%. The 25 basis point cut was the third time this year, after the central bank did cut rates back in June and July. But it was no surprise for myself nor many economists and analysts widely expected the 25 basis point cut. After the announcement, the Australian dollar did initially take an impulse to the upside and printed a high of 67.75 before plummeting 100 points to the low of 66.71, which was seen as a decade low, and also to the fact it respected the level of 66.80 after, you can see here, 3 rejections, now being the 4th. I would rather sit out for the moment and assess the outcome of the current intraday price action today, although there is a possible range of 80 to 67.55, but beyond there I am expected to see supply to come back to the market around 68 cents if we go that high. After numerous attempts to the downside, the euro has managed to rebound off the level of 108.65, which in terms was the dollar index cap at 99.30. I do assess now from the technical implications that we could see a short squeeze up to 109.55, but a cap still holds at 110 figure 30 and reassess from there. So expect a short-term increase, but an opportunity to shorten the market and see a retest to the downside. As feared, the bears did return back from that 108.30.60 level overnight for dollar yen, and from the rejection the market has now posted a negative outside range day. What triggered the move was the Institute of Supply Management survey of US manufacturing data showed that American factory activity fell for the second month in a row in September. The ISM manufacturing index missed the 50.4 forecast and dropped to 47.8 in September. The previous month's reading was 49.1. Now a level above 50 marks growth. So we're underneath that level twice now, and that was the lowest reading since June 2009. And the last month of the recession, also according to the Institution of Supply Management, which was put up by the report, does blame majority of it on the US and Chinese tariffs for weakness in their businesses. But as usual, President Trump did come back and attack Federal Reserve and saying that the weakness of US manufacturing reading was on the back of the Fed and Jerome Powell. But we've seen those tweets before. From a technical point, I do expect to see a move down to 107.55 to 106.70. The pound has posted a long-legged doji. For some of you, this is in terms of indecisiveness. Now, from this, we could see a small impulse to the upside, and plus we did reject near the 121.70 level. So I am looking up towards 124, figure 25, before the turnaround, and then expect to see another down test. The gold has managed to recoup some of its losses and triggered a $22 rally overnight after the US Institution of Supply Management did release its figures and being worse than expected. At this point, we need to break above 1,494 to reinstate the upside. Until then, the downside target remains to 1,420 to 35 and then reassess from there. This is given from the head and shoulders pattern that you can see here at the moment. So shoulder, head, shoulder. The measured move from the head to the neckline is outlined here to around 20.35. Finishing off with oil, the market is still pretty much in a downtrend, and I do expect to see the target reached around $52 to maybe $51 a barrel before any reversal to a bullish case. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to this new day.